Hi everyone, and you're welcome once again to DASTCI. My name is Diana today, and in this video, I want to quickly explain some major loss prevention and control strategies. Now, I want you to know that every trader has their own way of preventing loss or controlling loss, but we want to discuss some of the top 5 most used or some of the best ways to go about stop loss. Now, I'm going to mention 5, but I'm not going to start saying number 1 is this, number 2 is that. I'm just really going to mention them, but you can just follow through. Now, the first thing I want to talk about here is the trade strategy you're using. Okay, whether you want to be a technical analyst or a fundamental analyst, or if you want to trade based on any of those kind of scenarios, the kind of strategy you choose would also inform part of how you are going to control or prevent your loss. For example, some people place their stop loss order using a particular type of market indicator, and that is as per technical analyst. Now, fundamental analysts move more into long-term holding, like, excuse me, fundamental analysts move, they tend towards more of long-term holding. So you would find out that their own stop loss is kind of triggered through price alerts or things like that. So we want to discuss some of these ways in which you can actually start this and actualize it. Now, the first thing for you to understand is whatever strategy you want to use. Let's say, for example, you want to use market indicator for you to know when to enter the trade. It will also help you prevent loss. For example, if you already know that, okay, this is a bad time for me to enter the trade, maybe when you have a coin that responds well, or you find out that the RSI indicator works properly well on that particular trading pair, and then you see that, okay, this particular RSI is not, the relative strength index is not giving you a good enough sign to enter the market, you might choose to back off. That might be your own loss prevention strategy. So you can then say, okay, once this RSI drops to maybe below 30 or below 40 or whatever mark you've put in that works for you, you can then say, okay, you want to enter the market. So that in its own is already a form of loss prevention strategy. So I do tell people who like doing all these chart trades and things like this to always ensure that they have a market indicator that they are working, that they know works for them. Okay, you can use a combination of 2 or 3 on a particular trading pair. There is no 2 or 3 ways to go about it. So just be creative, try out different strategies, stick to one that works for you, but that you are sure you have tried several times that works. Okay, now if you are a technicalist or a fundamentalist, it is very important for you to know when to enter the trade market. So timing is the very most important aspect of trade loss prevention. Now, the timing and your exit point, those two things are very important. Whether you're a beginner, advanced, professional, or you just want to be a swing trader, trend trader, whatever type of trading you want to do, whatever type of trading it is you want to do, timing is very important. So how you use timing would also help you prevent some trade losses. Now, I don't want to go too much on that. Okay, so what we want to discuss next right now is trade security. I want you to understand that most people who go into trades are aware, professional traders who go into trades are aware, most of them are actually supposed to be aware that trading on an exchange is not 100% secure. Okay, if you are an hodler, you should definitely not be keeping your assets on a crypto exchange. Whether it's, the most traded or the most used or the most popular, does not mean it is the most secure. We find out that most centralized exchanges are often hot wallets, and cold wallets give you more room for security and are less prone to hacks. So that's in its own is a very important form of trade security. We have different types of cold wallets. Some of these are detailed in our core 2.0 course. I keep mentioning the importance of this course and why you need to get it. Okay, now, but you can also check the internet and check out some cold wallets that are out there that you can use if you just want to be an hodler, if that is your own trade prototype, like you just want to be an hodler and you don't want to keep trading every now and then. If you're a trend trader and just want to trade during a bullish trend as well, if you're holding coins during the bearish trend, you can choose to move them over to the cold wallet. Okay, so understanding the type of exchanges in which your assets are being held is also a very important aspect of trade security as well. Now, the next thing we want to discuss here, which is why I'm actually showing you this interface and why I've been showing it from the beginning of this screen. There's a particular aspect of trading that is called OCO, and I want to show you where you would find it when you want to sell. When you want to sell and you want to place an order, what you can do, I don't know if you're following my arrow, but what you can do is you can see different icons here. If you have already placed a trade, let's say you've bought this asset now, this AGIX, there's a way in which you can, place a stop limit order. We've explained this in the previous video, so I'm not going to go over stop limit order again, but I want to talk about this OCO. For the other one on stop limit order, you can check our previous videos, you would see it there. But here we have the OCO, which stands for order cancel order. Now I want to talk about this order cancel order. As you can see, I don't have any live order on this AGIX. I just want to use this as an explanatory video. So let's say I already bought 100 AGIX. Let's say I already bought it. Now I want to sell. Okay, so what I'm going to do is I might put a stop loss. I'm buying at the present price of 0.27234. Let's say I already bought it. So I do not want this coin to drop as low as 0.19896 that you're seeing there. I don't want it to drop as low as that before I sell off, because if it drops as low as that means I would have lost quite a lot of money, right? So especially if I'm putting in a high capital in this trade. So what is going to happen, what I'm going to do in that scenario is, however, because I might not be online to keep checking, it might as well have gone up. Okay, so the thing is, if it goes up, I want the exchange to sell. If it comes down past a certain point, I want the exchange to sell. So that means I'm trying to place two orders in one. That is the purpose of this order cancel order. I'm trying to put both an order when it rises and also an order when it drops to a certain point, because I don't want it to drop below past a certain point, because I'm going to lose some money. So that is when I use this order cancel order. Okay, so that way it gives me room to take profits. It also helps me put a stop loss order on it as well. So what that happens is, let's say I already bought 100 AGIX, so I want to sell it. I'm just going to type 100, although okay, this is 1,000 I typed there. Let's just leave it at that. Now the price that I want this to sell right now, it's 0.27162. So let's say I want it to sell at maybe 0.3. Okay, now here you're seeing stop. Okay, you're seeing stop. Now this stop means the stop loss. So at that point where I don't want it to go past, that is where I'm going to put this limit order. All right, so I might say, okay, it's already at 0.27162. I don't want it to go below 0.25, and I'll just simply type 0.25. So what happens is, if this coin actually drops below that 0.25, I won't have made significant losses, because once it drops to 0.25, the exchange will automatically sell it for me. However, if the reverse happens and it increases to 0.3, the exchange will also execute the order for me. Okay, so that way I've been able to place an order, giving room for selling higher and also giving room for controlling my loss so that it doesn't go beyond a particular point. Now that is just basically how it is. Now I don't want to go too into detail about how this works. It's a very simple process. I'm sure the more you keep doing it, the more you'll understand how to use this order cancel order. All right, it's very easy, and I highly recommend this, because if you're just placing stop limit orders, it might be restrictive to a certain aspect, but if you're using order cancel order, it will make it a little bit easier for you to understand how to give yourself less stress when you're placing this kind of trades. Now the other thing I want you to understand as regards trading loss prevention and control is the particular thing called price alerts. Now I see some people that say, oh, Diana, I don't have time for all these trading charts, all this stuff. What I just do is I buy coins and then I hold them in my wallet. Fine, all well and good. You buy coins and hold them in your wallet. Some say I'm an hodler. I want to hold the coin for like 1 year, 2 years, 3 years. And then you will find out that sometimes, like for example, between 2021 to 2023, we've seen a drastic, crazy price action of Bitcoin. It rose to 60,000% during this period. It also dropped to as low as $15,000. Sorry, I meant dollars. It's also dropped as low as $15,000 within that same period, within these years I just mentioned. So if you decided that you wanted to hold for a year, you would have actually been in a huge significant loss if you didn't set a particular parameter for your stop loss. All right. And this is why risk management comes in. You need to understand that for any trade you want to place, you cannot go in there with all your funds at all times. Do not enter a trade with all your funds at all times. Even when you budget and you say, okay, I've budgeted $100 for quick trades, even in that $100, do not enter with that $100 all at once. Enter with a part of it. Okay, this is where dollar cost averaging comes in, and we explain part of this risk management in our course. It's all details there. Now, if you have already set aside a part of that to enter, you know that you always have funds to replenish. And so once you replenish, it gives you a new ground for you to make higher profits and also regain some of your past loss as well. So that is a loss prevention or a loss control tactic as well. Now, for these hodlers, as I was saying, if you want to hold for a year or 2 years, you can set up something called a price alert. Because I'm using the direct web-based version, you might not see it here. But if you're using the desktop app, you would see this icon. You see the icon somewhere around here. If you're using a phone, you would see the icon somewhere around here. It's just simply written alert. Just look for any icon, and once you hover on it, it brings up the alert feature, and then you just click on it and say, okay, once this price drops to a certain point, alert me. Or once this price increases to a certain point, alert me. So even if you're an hodler, so far you've set a price alert on it. If you see that the asset is falling below what you can take at that moment, because you're not in an active trade, you might not be able to actually use stop loss. That is what some people claim. Okay, so now in that kind of situation, you can simply use price alert. It's as simple as that. Okay, you can also try to use this other cancel order when you're buying the asset, so that if it is for a certain duration of time, you know that you still have access to control that loss or prevent it in that regard as well. Now, the last thing I want to talk about here is for you to have proper trading psychology as regards trade loss and prevention, because you might put all of these strategies in place, and then maybe because you encountered a little loss, you just keep trying to enter the market just to recover your loss. You need to understand that there always needs to be a strategy for you to enter the market. Don't enter the market based on subjective reasons. Enter the market based on conditions, objective conditions. Understand your entry point, understand where you're placing your stop loss order, understand where you're taking your targets, all right, and get ready for entering. Get the proper skill set. That's what I mean by get ready. Get the proper skill set to know the proper way to enter the market. That means you must have done very good fundamental analysis and very good technical analysis as well. Now, if you're joining a signal group, you need to understand the strategy for their signals, maybe by going through their courses or whatsoever, or asking direct questions, so that you know how to place your own stop loss order in relation to the strategy they are giving to you. And you need to know if that strategy fits with you or your own trading psychology as a whole. Now, that is it for today's short explanation on how to prevent your stop loss and how to prevent your trade loss and how to control it as well. You can always control it, like I said, by replenishing. You can also prevent by using a variety of some of the things I mentioned earlier. Thank you very much. My name remains Diana today. It's been nice having you here. See you in our next video. Do not forget to subscribe, like, and also click the notification button. It helps us reach more people that can also benefit from some of these videos as well. Like I'm sure you would have benefited as well. Thank you very much.